Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's August 3rd. This will be our chart listen for the day. And really kind of a strange day. It looked like we were going to have a really strong sell-off that was really just a continuation from the previous day, you can see. But we found a bottom down here around 43.65, bounced out of here, and this thing rallied strongly. This is a spike in channel. We actually went up here. This green short term actually played out. You had a little two-legged correction, and then you went into this spike in channel. This is really a bigger spike in channel almost. So I would have one thing to look at. That's one leg up, and then you had the two-legged correction there. So you could have looked at that as a possible target. We didn't get anything near that. We could before it's over, but that puts us back up here to the the recent highs around 42 or 44.20, 44.25 range. So that was what I was looking for. We didn't get it, uh, but that's a really strong move up there. And then we looked like we were going to sell off again. So it was a really odd day. It looked like it could be a range day. Uh, but the first target you would have had when we started rallying here, and you can see how quickly we got there. It's not uncommon for prices to come back uh, and test these overnight. So once we started rallying up here, you would think, hey, that's probably the target, but you don't expect it to rally that fast up there, and then it sold off just as quick. And it was kind of hard to see what was going on right here. It looked like it might be a range, but I don't know if this was necessarily a range, but more of just support. And we did have some resistance where the overnight close was, but I'm not sure if you could call that a range there or not. I mean, by the time you see that it's a range, which would be when it bounced here, you're thinking range, but it just took right on off, and you really didn't get a whole lot of resistance up here. You had a little bit here, and then we looked like maybe there's a failed breakout. But when we came back the next time, boom, it was off to the races. So a little hard to call that a range, but that's how I was playing it early on. Uh, especially when we bounced right along here this last time. I thought it was probably likely to be a range, but it wasn't. And we just ended up in this real tight super rally trend channel here. So anyway, let's back out. We'll go through the trades. Early on, this was a pretty good move down here. And if you could have caught one of these, maybe all you needed today. It really got a little tricky from here on here, and even here it's kind of tricky. And then we got another fairly decent trend here with a couple of setups on it. So not a lot of trades today considering how much movement, and that's the sad part. If you don't catch this down here, you don't get a chance to catch this. And I would almost call this an aggressive trade. These are trades I like. We'll talk about it when I get to it. These when you get those little traps at support or resistance, they often are important lows or highs of the day, depending on where the trap occurs. But we'll talk about that when we get there. Let's back out or zoom in here and talk about the trades and go from there. Early on, we had this two-tiered channel working up. We had a break, and we kept trying to move to a new high. I don't think we quite got one. 43.97 and a quarter. 43. Yeah, we didn't quite get a new high. So it looked like it might be a range day early on, especially when we started getting resistance here, but it just boom, it pushed on through there quickly. But notice we came up, we made a high. We tried to go higher again and made a lower high. The key is, do you have enough room to get out between here and there? Um, if you do, you may take that trade. I marked it red. I like that trade because we tried to go higher once, twice. So there's a triple test and then a lower high on that. And there's a little bit of room in there. So if you got enough room, just make sure. You might let it break lower and drop a limit order, but this thing dropped so fast, I don't know if you could have got filled on limit order. That's the reason very rarely do I use a limit order. I almost always use stops. I know there's a lot of people that are afraid to, they just have to use that limit order and they try sneaking in with a better price. But I'm telling you, you're going to miss if you used a limit order, you might have missed this. If you did, that's a nice move down there. And you just can't afford to miss those kind of trades because these are the ones you get runners on too. I mean, if you look at that, that's a 9-point move. And if you try to use a limit order, you may miss that trade. So that's my reasoning behind it, especially when now if markets are going sideways a lot, which this still looked sideways there. So if you're trading that based on it looking sideways, you might have missed this whole move, matter of fact. So just something to think about. Be careful using those limit orders. Nothing wrong with using limit orders, but what I'm going to tell you is you're going to miss a lot of the very best trades. Just be aware of that. And that's why I teach people to use a stop entry. And yeah, sometimes you're going to read it wrong and you're going to get burned. But when you get enough experience reading the chart, you'll know for the most part you're going to get it right the majority of the time, or you should be if you're a good chart reader. If you're not, then you're not a good chart reader yet. Simple as that. But anyway, lower high right there, I like that one. It's a nice quick move. And then there's a first entry, second entry. So second entry short confirms the trend line right there. Nice bearish bar. And again, it drops really fast. You get another runner right here, most likely. And if you catch this, you might ride it all the way down. This one's very tempting. This is where the support was on the overnight close yesterday. And we actually came back and had a double test of this right here. The problem is it just looks like a single test because that's the first test and then that's the second one. So we didn't get that third one. But you can clearly see prices make a double top there, and you've got a lot. The support is acting as resistance, the trend line, the midline. I think you're better off to wait on the lower high though. And you can see when you got the lower high, it works, but who wants to go short right at the lows of the day right there? Not me. Even in a strong trend and right off that key entry point. It's one especially with it going sideways, that is not necessarily congestion because you don't get the tiny bar that has no body. Yeah, there's a few stems. This just looks like prices are trying to bounce out of here and they can't get up any momentum and they just drop again. That's what that looks like to me. That's not necessarily congestion. But when it breaks higher there and turns down, if it went right on through, maybe you enter, but it doesn't. And then it breaks lower and it still struggles. Then finally it drops on down. You may take that trade. I didn't mark it, but it's a trade you may want to take. I'll at least make it green. But there's reasons to be very leery of that trade. But we drop on down, we get a break. You got this short-term trend channel. Break, 2 legs down. We try to go lower again and bounce. You don't want to be trying to pick bottoms here. Don't do it. This is basically a double bottom. So first entry, second entry, nice signal bar. That's an easy trade. And if you didn't enter there, you get a lower high, another nice signal bar. Enter on either one of them or both. If you entered this one and got stopped out, enter back again right here. That's a perfect setup. And of course, now we got the break outside or convincing close outside that trend line, move to a new low, and then we bottom out and take off. I don't see any way to get in this trade. You might look at this. This is actually a failed second entry short. Notice that low, and you go first entry, then it goes higher, and then second entry. But that's congestive right there. That's what congestion looks like. Notice the small body right there. We were below the EMA. There's a chance you could get another leg like that. There's not a good entry there. And unfortunately, look at that move. And there's just nothing you can do about it. There's no safe entry on that trade. And most of the time, if you entered right there, you'd get burned and you would be stopped out. So it's just one of those. It's one of those surprise rallies when somebody decided to buy there that probably had the buying power to push it up, and then suddenly all the shorts that chase the market chase in, and it looks like an easy money. But the next time you try to trade it, you might trade that 10 times and only be successful once, and that once you might get a big move, but those other 10 times are going to eat you up. It's just not worth trying it. So that's my thoughts on it. So. But anyway, we're moving up. We get a close outside, new high, try to go higher, and then we're dropping here. Again, you get a reversal. Not a very good one. You might look at this as a double top, first entry, second entry, and say, hey, maybe we got a reversal going on here. But we're working sideways right there, so this is what happens, and you get burned if you try to go short there. It's just not a good setup. The signal bar is very tempting, and but this is a short trout, and it bounces, and you get two legs up, and like I said, it looked like it was going to be a possible range here. We're just kind of chopping sideways. I get a trend right here. Notice you actually get a first entry, second entry, but it's not a reversal type pattern. It's looking like a range. We come back up, we turn down, we come back, and we confirm the trend line there, and we make a lower high there, and there's a second entry short with still plenty of room back, and that's a fairly bearish bar. So that's the only reason I like that trade. You can clearly see that yellow channel's in play. In the end, the range, or the support at least, overpowers it. I wouldn't say the range does, but the support that we're seeing here that made it look like a range overpowers this and turns it higher. But let me back out where you can see this. Let me move this. But you can clearly see that sideways action, and we drop down and it fails real quickly. You do have a channel working down, but you've got a lot of support across there, so you don't know which one of these is going to win out. If you've got room to get out between here and there, you may take this trade, and if you do, you get this huge move out of it. But it's another one of those that if it's a range, it's worth taking. But hey, maybe the yellow channel's in play and it wins out. There's no way to know for sure. So the key is you got to have enough room to scalp out before you get back to this trend line. And if you do, by all means, take that trade. So we start one tick ahead there, and you can see you've easily got more than a point. Even if you come in way down here, you got more than enough room to scalp out. So I think that's a trade you may want to risk if you want to try to pick an important low, because that may be one. And again, you may only get a scalp out of it. So it's hard to know. But when you see those failed break lowers like that, they trap people and they become important lows. And if it's off the high side, they become important highs. And you can clearly see that became an important low. Look how that thing rockets. And that's the only opportunity you had to catch that. If you didn't get in here on a little bit of an aggressive trade, you don't get a chance to trade this. So, and we're working sideways. You probably would have wanted to move this up by that point, like so. And then before it was over, you might have even wanted to move this one down. And you can see this just becomes a two-tiered trading range. And I don't see any shorts here I'd want to take. There's no short right off the high up here. You do have one decent signal bar here, but it's just too sideways, and that's definitely congestion. And you see it would have worked, but it's not worth risking out of that congestion. We are a little ways away from the EMA, but that doesn't mean we can't push on higher first. And then you really get two legs down here and come back. And I liked this one because it bounces off the midline, the EMA, and there's a bit of a triple test there. There's enough room to get out before the highs. You didn't quite get back up to the highs here. And, we don't count second entries inside a tight range like this. But if you see one, it gives it, and everything else lines up, it gives it a little more weight. So you got that going for it right there. And technically, it's also a first entry, second entry failure right there with a short trap. So, because that's likely to trap some people that don't know any better. They got short there, or even the lower high right there, because it looks like we came off the highs right there. And that turns out to be another great move. And then we're just working sideways again. And I don't see any trades in there worth taking. Nothing worth risking it on. Until we run up here and then we work sideways again. And there's that little trap, very similar to this one. where it drops down. And note too that if you draw this trend line right here, that confirms it. And you got a nice bullish reversal bar. That's rejection off that line real quickly. I like going long there. And if you catch that one, you may very well catch another runner here. And then you just simply get a second entry long that comes back and tests the breakout area. EMA. Off it goes again. There's a high or low right here, but it's too close to the high of the day. It's not worth risking. Look at that nobody doji looking bar right there. It looks like you may be setting up congestion, so just skip that one. And you can see the prices didn't really go anywhere. They come back. And there's actually two legs back here. So this is a second entry. It's a fairly big bar. You got matching lows, so technically you can use this for the signal bar. You know, you see there's about 9 ticks, which is not a lot of ticks, but for this day it's a pretty big bar. And so I'd want to have something perfect right there. You're probably better off to wait on the high or low, which comes here, and then you're right into the resistance. So there's actually a failure right here, but again, you got to go long into the highs. And I just don't see anything. Being this late in the day, you might take that trade. I still call that a little bit aggressive, but you may take that trade. And as you can see, there weren't a lot of good trades today, or even a lot of green ones that I felt comfortable marking. So as much movement as we got there's just not a lot of opportunity. The ones that are there are pretty good. Just about all of these caught some runners. I mean, several of these. This probably caught a runner. This might have caught a runner. This one might have caught a runner. I mean, that's the good thing about it is a lot of these you could have caught a nice runner and you only needed one trade today. So, when it's trending like this, try to get runners. Especially if it's trending back the other way, this strong like this, try to get a runner off those key entry points because days like this, they're easier to get. And when you catch a good one, they do multiply. It changes your math considerably. So I think I've mentioned this in the forum, and I've been meaning to update it, but I've been testing the MES, trading it live. Some after I finish my morning trading, just open up an MES chart and trading it live. And I found it to be, I'm using a 950 tick chart. I found it to be incredibly, I hate to say this, but it seems easier to trade than the ES to me. It pretty much moves really close. The patterns are the same. The bars won't always be perfect, but the patterns are really close. Some days they won't be exactly the same. But many times, if you see like right here, if you had this failed second entry short, you might see it on the MES too. So they're there, and just watch for them. So I mean, I've really liked the setups are just almost the same. The patterns are really close. Again, occasionally the bar is a little bit different, and occasionally you might get a break on one chart that you don't get on the other. But for the most part, they trade very similar. And I mean, I'm on like a long time win streak on that MES. It's been just, I'm really kind of shocked at the success I did have with it. So, and that's trading it live. And so things are going well on it. And if you're a member of our forum, you can go in there and see some of the results I posted. I'm going to update them soon. So, but it's been pretty impressive, really. I've actually impressed myself with it. So, not to brag on myself or anything, but I'm shocked at how well I've done with it. I didn't expect it to be, I didn't know what to expect, to be honest, but people asked me about it so much, I felt like I needed to start trading it some and trading it live just so I could speak from experience. And I think as far as the learning, you're not going to make any money trading the MES, not real money. I've made more money than I thought I probably would. It's not something that's going to make you rich or anything like that. But if you just need the idea behind trading the MES is to learn to trade in a live market with real money without losing your trading capital. Because that's what happens to most people. They go trading live in the ES, and you don't have to make but a few mistakes, and you can wipe out a small account in no time. And in the MES, you may not make but a couple of $300 or $400 a month if you're on a good win streak. But the key is you won't lose much more than that either. So you can trade, you can trade and do really badly and not lose all your trading capital. So I think my personal opinion, it is the next logical step from sim trading. Once you prove that you can double a 10,000 sim account trade in the ES, then I think the next logical step is to trade live in the ES and trade exactly. If you're going to trade 3 contracts in the ES, and that's what I've been doing, I've been trading 3 contracts, scalping 2, and a runner on 1. And I've had some extremely good success at it. Again, I'm not getting rich on it. It's just something to do to test the market and prove to everybody else that it trades and can be traded just as easily, if not easier. Because I'll just tell you, I haven't had a single loss in the MES in over a month. And I know that probably sounds, somebody will say, try to call BS on that, but I'm going to post my results and you can see them. So they're there. They'll be there in the forum. So it's been pretty impressive. So anyway, I didn't mean to get off on a tangent on that, but I wanted to throw that out there. I really think that should be your next progression. Again, not because you're going to make any money at it, but you can test it live and you can get your feet wet, stick your toes in the water, trade in a live market without the chance that you're going to lose all your trading capital, because that's what most people do. Most everybody's going to think they're ready before they are, and they're going to go live and they're going to blow their account. Without the donators, there is no trading. There's no profits for most of the traders. You got to have donators, and they just there's always a new donator coming in thinking they're smarter than the next guy, and that they can go live no matter what I say or anybody else tells them, and they're going to do it, and they're going to lose their money. And I just hate to see people do that. The people are a lot, especially smart people. And trust me, if you're really smart and have a lot of good common sense, you will blow at least one account. No matter, I don't care how smart you are. I don't care if your IQ's double mine or anybody else's or the highest in the world. That will probably work against you, because prices do not move based on common sense. And in life, common sense works really well for people. It does for me. It's one reason I've been successful in life, because I've learned to trust my instincts and my common sense, and that's good, and that really gets reinforced over time in life, and so it becomes something you learn to rely on. But when you go to trade and you open a chart and you start using those common sense and your intuition, you will get chopped to pieces, because price axes do not follow common sense. They do not follow logic. And so you got to learn, which is what we try to teach you here, is how prices move, and it'll be exactly the opposite of what you expect or common sense tells you it would be. So that's why it's so hard, and it takes a while to unlearn using your common sense and things like that. So again, I didn't mean to get off on this tangent, but it's important stuff, and if you're still around listening, hopefully you learned something from it. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next.